Alright, Michael, I'm going to go ahead and give you your crash course on how exactly to use the Soteria resistance and support system, alright? You're going to want to open up MetaTrader, go to the Meta Editor. It's to the left of the Auto Trading button. Click that. You're going to go to Experts, right-click, Open Folder. You're going to drop in the custom files that I sent you into here. Soteria Decision will go into this one. And then the indicators I sent you go into the indicator folder. Just right click that, drop them in. You should be good to go. Alright. So we go back to our MetaTrader. I'm going to run a simulation so you can see exactly how this plays out in real time. Alright. Open up a 1-minute simulation, turn on visual mode. Let's do 0 odd. And begin. I just have to finish like a quick training video. Yeah.
I was just wondering, do you know anyone, or does anyone hi? Anyone you know?
Alright, so now we have our simulation running. The way it's going to work is we're going to look for consolidation among our moving averages. Alright, so if we look at this trade here, we see that we have a couple different moving averages on the chart. Alright, so we have the purple line, 150-day moving average, the green line, which is going to be your 100-day moving average, and then the blue line, which is our 50-day moving average. Alright, their lines are a 10 and 5, not as important here. Alright, the color bars that you are seeing appear on the charts are bars that I've made to show the support and resistance levels in the market. All right, it uses machine learning to dynamically place each one, and it scans across all the different time frames so that all you have to do is you have to open up the 1-minute time frame, and every line on this chart the market will respect. All right, it'll either stop at, reverse, or slow down. So if we look at here, if it breaks through this support, it'll fall down to the next support. Just as if it breaks all the resistance lines up here, the market will run away. All right. So the profitable areas of our trading strategy are going to be the voids in these areas. Okay. So you look here, we have a congestion of different support and resistance levels. All right. This symbolizes that a breakout is about to occur. If it breaks below all these, it'll fall down to this level here. Just as since it broke above, you now see the market running upwards. If you look over here, it's going to tell you where the next stop and reverse point in the market is. So we're going to see it rise up to that here shortly, and then you will see the market stop and reverse at that point. Let's watch that occur. You also note that as the market moves, your support and resistance levels change. It's extremely accurate, and you'll see this happen here in just a moment. It's going to touch a red bar that appears on top of the screen, and the market will immediately reverse or pull back. All right, now we are 30 pips away. And there we go. Comes up, touches our resistance level perfectly, and now we're going to see a reversal back down. All right. If you see the bar turn white, it is possible for that resistance level to break, or for the market to shoot past or below it. This is based on volume. Basically, in order to hit higher highs in your market, you need more money in the currency pair. Just as if you were to hit lower lows, you need less money in your currency pair, right? So now we see the market rising above all these support levels. You see how it sort of step ladders its way through until it hits a strong resistance. In this case, it's going to be the 150-day moving average on the 1 hour. So you're going to see it probably reverse here, fall below these lines, and then come down and meet these support levels down here. Because we have a lot of strong resistance up here, we're going to see a gap. The market's going to enter into this void, and then our target profit area will be this line down here. And this is where stochastic becomes your best friend. I hope you read up on it like I told you to do, because this is how you use it. What stochastic represents is the many cycles inside the overall trend of the market. Okay, so even though that this is moving up, there's upward, downward cycles in that upward trend. You see? It'll go up, it'll pull back, it'll go up, and it will pull back, and it'll go up, hit a resistance level, pull back. And stochastic is going to tell you exactly when that's going to happen. So look here. I'm going to pause this simulation. Actually, let's watch it in real time. Now stochastic's at the bottom. The market's bound to pull up until it hits its next resistance. Just as it did there, it's at this top. Now we're going to see the market come down. Stochastic happens to be one of the most accurate indicators you can use. It's going to be your best friend to tell you whether that support or resistance level is going to hold, or when the pace of the market is going to change direction. All right. I believe I also told you to read up on the money flow index. The way that one works is it has to do with volume. Basically what volume means is, again, the money in that currency pair. So money flow acts as an oscillator for that volume amount. It takes typical volume compared to the typical price of the recent market and gives us a generalization of how much it is compared to the past. Okay? So in order to hit these lower lows, like I was saying before, we're going to want the money flow index to be below 50, which means investor interest is low, which means there's less money in the market, which means you're capable of hitting lower lows. And the way you hit lower lows is this. Look here. Your support levels keep you from hitting lower lows. So if, logically, right, if the volume falls, if there's less money in that market, then those point of interest, those support levels, shouldn't hold because the investor interest isn't there. Just as if the volume is very high, the resistance levels aren't going to hold because now you have more money in the market than the market is used to having, so it'll hit the higher highs and the market rises. Okay, and that's why the void trading becomes so important here. So let's zoom in. And we see that the market begins to consolidate between these moving averages. And now we're going to see that all these other color lines are going to pull in and form sort of a pinch. All right, and once that finishes consolidation, the market will be set for a breakout. Another thing to keep in mind when you're trading with this strategy is the lines on the local chart, the 1 minute moving averages we have displayed here, will also act as those resistance and support levels. Just as you saw, it came up and touched the 200 moving average and pulled back. We see it broke this blue line, which was our last resistance, so it exploded up, hit the next resistance level up here, and now it's going to oscillate between those two levels until it breaks one way. If it breaks out the top, it's going to rise to a new high. If it breaks out the bottom here, it's going to fall to this support level down here, right? Now, there's a couple other miscellaneous scenarios that can occur when trading with this strategy, and the ones that you're going to want to look at is if the gap, this little void, the space between these moving averages is abnormally large, something bigger than, let's say, 500 pips. You're going to want to look to the left, scroll back in your time frame, and look for local lows or local highs to identify, because sometimes the human psyche will hold the market value better than these bots trading with the market is, because again, the market value is driven by human intention and the bots carry out the actual trading process. So I include an indicator in my package that helps you identify those lows and highs. You're going to take last man standing, drag it onto your chart, and now it's going to automatically define where your lows and highs are in the markets, right? The blue and purple are major highs, and the blue and purple on the bottom of the candle are major lows, and then just the blue ones are minor highs and minor lows. So an example on how to use this. So there's a big empty space between these two moving averages, but I see that there was a major low at that point before, sharply spiked down and then spiked up, which means there was a strong resistance there, which means when I'm trading this gap, I want to make sure that I appreciate that support level there. I want to make sure that if I have a take profit, That's going to be my first take profit to make it safe. Okay? And then if it doesn't hold, then you can expect it to fall down to the next target, next support line that's going to be below that local low. Hope this served as your little 10-minute demonstration crash course on how to use the indicator. I'm going to be out of town for, until probably midday Monday, going out to Vegas. I will still have my phone on me, so if you have a couple questions on how to trade, I'll still be sending out signals every night during the days of the week. So I'll send them out. Let's see, it's Wednesday right now. I'll send out signals tonight when I'm on the road, as well as Thursday night, and I might do it for a London session on Friday. Just depends on how my schedule goes. But I'm available if you need me. Cheers to the weekend. Good luck.